Hello everyone, a very warm welcome to this live webinar, Why India Needs Urgent Tax Reform. You are about to witness an important, insightful and a very interesting session. Thank you Tax Guru for this opportunity. My name is Bharat and I work as a data engineer, and like many of you, I am also a taxpayer. So I am hopeful that by the end of this presentation, your perspective on taxation is going to change significantly. So let me set the context first. So why do we need a tax reform? Tax issues have remained in India since ages. It's not about this government, but even since the previous government this problem existed. So we understand the pain points of both the taxpayers and the government, and that's why we have discovered digital transaction tax. Digital transaction tax is a game changer. It's also a short form is DTT. It's a game changer that can propel the Indian economy to new heights while greatly reducing the burden on income taxpayers. We request you to watch this revolutionary tax regime or tax proposal till the end to understand better. We dedicate this session to honor all the hardworking taxpayers of this country who are the real heroes, and in a very step-by-step manner I'll so just give me a moment. In a step-by-step manner, I'll apply very fundamentals of data analytical skills, and I'll try to show how we can solve this tax problem. So let me begin by starting a story. Okay. So a very reputed and a credible NGO reaches out to you to donate blood, to request blood donation on a noble cause. Now, since you know this organization is a very credible one, you go ahead and make your blood donation. However, the vehicle that was meant to transport your blood meets with an accident. And as I conclude this story, the point that I am trying to make out is the NGO approaching you for a noble cause is the growth of our Indian economy. And your blood donation represents your taxes. And the faulty vehicle or the elephant in the room, it represents the complex taxation ecosystem. So the government is honestly collecting taxes. Most of the taxpayers are diligently paying their taxes. But due to this complex taxation ecosystem, due to a lot of amendments, it is hitting our nation very dearly. So how do we fix this faulty vehicle? How do we simplify the taxation? Our whole discussion is going to be on this aspect of the presentation, as to how we can simplify our taxation. So India has nearly 22 types of taxes. The number may slightly differ, but under the direct and indirect tax umbrella, there are 22 types of taxes. And in spite of that, we have a very poor tax revenue. And we have a very unfair and a complex income taxes structure. Unfair in the new tax regime where it's up to 30% taxes, and complex in your old tax regime where you have to submit so many income tax proofs. Now the fourth point is the HNI migration. Now HNI migration represents the high net worth individual migration. So who are high net worth individuals. Anybody whose net worth is above 5 crore rupees per year, they are called as high net worth individuals. Now, if they contribute to taxes, it makes a significant impact on economy, but they are choosing to leave India due to its complicated taxations, and they are choosing for a better infrastructure to settle down in a country with a better infrastructure. So how DTT will solve the Indian taxation problem? So for that, we need to understand only three fundamental things. Understanding what is our tax collections, understanding what is the debt position, and understanding what is the digital transaction footprint in India. And for that, I'll need to give you a short demo. So I'll come out of my slide and I will go and open the relevant links. So this is the first PDF which is prepared by Department of Revenue, Government of India. You can search it on Google, or if you have gone through the prerequisites, this URL is already mentioned there, you can access it. But this sheet looks little bit intimidating as soon as you read it. But it's not so. It's very simple to understand. Even though there are so many rows with so many financial parameters, what is important for us are only these two fields. Net collection of direct taxes. Okay, what is net collection of direct taxes? Direct taxes minus the refunds, or gross direct taxes minus the refunds is net collection of direct taxes. And our reference point is going to be 2021-2022, because when I was doing this analysis or case study, the next year's data was still not completely ready. So I decided to keep this as my reference point. And it is clearly telling the number that they are telling, it's in crores of rupees, right? So net direct taxes in crores of rupees on FY21-22, it is 8,08,800 crore rupees. Okay, this is the first field. So I have already made a note of it in Excel. For FY21-22, net direct taxes is 8,08,800 rupees. Now, since we are dealing with very big number, it is important that we convert them into a much bigger number format like trillion or lakh crore. Lakh crore and trillion is the same thing. It is 10 to the power of 12. So 8.088 into 10 to the power of 12 is our net direct taxes. Same way, let's look at our net total taxes. Even that is in crores of rupees. So net total taxes, I'll just zoom out. So FY21-22, it is this particular column. It is 17,65,145 INR rupees. So the same thing, I again took it in Excel, 17,65,145 rupees. In trillion rupees, it was 17.651. So digital transactions value is also this, but I'll show it on the website also and for reconfirmation. So this is all about our net tax collections. That means we are making 17.65 trillion rupees. It looks like a big number, but unfortunately it is not big enough for a demography of our country. It is not at all sufficient, and I will show you why. Second thing is debt position of Government of India. Now Government of India takes loan from IMF, Government of India takes loan from World Bank, Government of India takes loan from other banks, and they are holding a debt position currently. Okay, so just see this screen, and if you this information is also available. Even if you Google search and type this particular keyword, deposition of Government of India, the first link only will show. So let us look at 31st March 2024. Okay, it is 169,46,666.85 crores. So in trillion, if you do it, it is 169.4 trillion. 169 point it is 169.4 trillion. So, and they're also not stopping there. They're telling if they do other exchange rates and EVRs and other cash balance, if they adjust, it will go all the way up to 172.5 trillion. Now, net taxes are at 17 trillion, correct? Debt position is at 172 trillion, almost 10 times. Now, is this a good or a bad? I definitely think it is not a good sign. So, the last slide, that is what, and this is where we actually should appreciate our present government. So if you remember, after demonetization happened, the government made a major push for digital transactions, and the push was so hard that today we are world #1 in terms of digital transactions usage. And today you can see that even the street side vendor, he is also able to make business with just one QR code sticker in front of his small shop. So that was the beauty of digital transactions, but maybe it could have been utilized better. So this is the published digital transaction information. So the Government of India is telling that from FY 2017-2018, they're telling how many number of digital transactions happened, right? And they're also telling what is the value of digital transactions for every financial year. So this information is clearly documented by the government. Remember, all these three are government published information. And what I'm going to do is I'm going to take this information and come up with a case study and how we can solve our pressing taxation issue that has been available probably from the post-independence era, right? So yeah, you can see almost a 380% increase from 2017-2018 to 2021-22 in terms of digital transaction growth. But the value has been also increasing, but it is not as exponential as the number of transactions. So I stopped at financial year 21-22 as my reference point. You see, even 2023 information is not complete. They're telling it's only up to December 2022 they have this information. And they're also telling what are their payment modes they have considered and from whom they have got all this information, RBI, NPCI, banks. So digital transaction is not only on GPay, PhonePe or something. If you actually visit your bank's passbook statement, or you take a e-passbook, you will see every transaction is registered there. So you also can do a lot of back tracing. So even you can go 5 years back in history and see how much of transactions you made on the same day today. So that kind of insights your bank statement passbook offers you. So like I said, they have clearly told in trillions of rupees, it is 3021 trillion. Okay, so this is the digital transaction footprint. The demo happens here. So I'll stop for questions, and just tell me if my screen is showing in full size or it is showing in half size. If you are having any audio difficulties, please ping, and I'll just check on this. So just give me a moment. Let me see if I've got any questions. Okay, so now I'll go to the next section. Sanjay sir, if there are any questions, you can just let me know. Okay. So I'll move on to the next slide. Now this is just a recap of whatever we have seen so far. Net direct taxes is 8.088 trillion. The total taxes are 17.651 trillion. But did you know something? This 17.651 trillion is just 5 to 6% of US tax collections. Now why I have to compare with United States of America? United States of America is the world's second largest democracy. Okay, and its population is just 33 crore rupees. 33 crore people. And in spite of them having 33 crore people, they are having a population much higher than they are having a tax collection much higher than India's. And on the contrary, India being the world's largest democracy, India's tax collection is only 5 to 6% of US tax collections. And ideally, India's tax collection should be much more than US tax collections. So if you take any developed country, you will notice that their government has a very healthy tax collection, and whichever government has a very healthy tax collection, you will see there will be infrastructure of roads where there you don't have to pay tolls. You will have very good healthcare facility post retirement. You will have a very good lump sum retirement value because they're able to fund that. They don't have to outsource it to some third party using a PPP or a private public partnership. So this is why having a very robust and healthy tax collections becomes very important for any country. And the whole idea is I'm trying to get closer to that goal. So real data, real growth solution with FY21-22 data. Whatever I wrote in Excel, now I'll have to show it on a PPT. That's what I'll be doing. So you see net indirect taxes. Net indirect tax is nothing but total net taxes minus direct taxes. So this is how we achieved at 9.563 trillion. So all the indirect taxes put together is only 9.563 trillion. Now 2% based on the demography of India and based on the transaction value, we are suggesting you just put 2% of digital transaction tax on 3021 rupees. So you will see that the number will become 60.42 trillion. 60.42 trillion. We have already tripled the revenue. Clearly, digital transaction tax has tripled the revenue. It's a 242.5% growth compared to 17.61. Right? Overall estimated percentage growth in overall revenue 242.5%. Just imagine with so much of tax what more government can do. And it doesn't stop there. If you take individually the direct and indirect taxes, it still outnumbers them. It outnumbers them by a big margin. It is 647% more than direct taxes. I think never before in the history, nobody has been able to demonstrate the power of a digital transaction tax. It is 532% more than net indirect taxes. So clearly digital transaction tax is a more reliable, robust and a beneficial tax for the government. Right? Government is having triple the revenue. So imagine if it's with 17 trillion it had said okay 1 trillion is for road budget. Now they can keep 3 trillion because it's almost 3 times. It's 3.4 times to be precise, but I'm just saying almost the triple tax. So DTT as a taxpayer, how does it affect? So I said 2% digital transaction tax, but for a taxpayer it's actually 1%, and that's what I'm going to explain now. Let's say I'm a buyer. I'll go to a merchant and I buy goods worth 1000 rupees. Okay. Now at 1% of tax for both buyer and merchant, because both are taxpayers, so at 1% tax it will come to 10 rupees, and same thing will apply for a merchant. And transaction will always happen between two taxpayers. Hence we are taking that 1% tax, and it will ease the burden. It will come down from 2% to 1%. But if you see the total tax, it is 10 plus 10, which is 20. 20 is nothing but 2% of 1000 rupees. So it is, to summarize, 1% of digital deposits plus 1% of digital withdrawals. Now you might wonder that, okay, whenever I pay someone through GPay, that means immediately 1% will get deducted. No, it's not that. We can always consolidate taxes towards the end of the quarter or end of the half year and compute advance taxes. We don't have to burden with more transactions for each and every transaction. So this is how revolutionary it can become. So just imagine, today you are paying 30% of income taxes if you are at the higher end, and innumerable number of GSTs. But with just 1% tax, how simplified your life will become. So this is what we are trying to explain as a digital transaction tax model as a taxpayer. And as I suggested, it can be aggregated and computed in a quarterly manner. Yeah. So now I'll take questions, and once I get the questions, questions should be on the contents covered until now. Questions covered. We still have some more topics to go, so you can ask your questions on any doubts right now. So in the next section, I'm going to tell the further powers of DTT. So in order to explore DTT's further powers or extra powers, so I have to make a tax proposition. Now what is this tax proposition? Because see, everything is a case study based, taken on government submitted information only. So we have to make some tax propositions, and we have to see the benefits of that tax proposition for the public and for the government. That's my whole intention of doing this simplified data analytics exercises. So we are saying from 2017 to 2018 onwards, you do a reversal of ITR returns. Why am I saying reversal of ITR returns? How practical this is? It's not about the practicality, but if you notice the pattern of ITR returns, every year you will have only 1 or 2 ITR returns. Okay, you may not have more than 1 or 2 ITR returns. So because you file your ITR returns once in a year, even if you go and now and visit the income tax portal, it will tell you how much of taxes you filed. Right? So that is why I am suggesting, let us assume that government is doing a reversal of direct taxes. When I say ITR returns, I am telling all the direct taxes. And we don't want to make any changes with indirect taxes. Why we don't want to make any changes with indirect taxes? Because let's say I am a indirect taxpayer. Today I went to the supermarket, I paid some GST. Tomorrow I'll go to the fuel station, fill fuel, and in my fuel maybe 50% is VAT and excise duty on the petrol. So you see it's scattered all around. You can't really collect it back. And the next thing is, if you looked at the transactions itself, many of those transactions would be GST embedded transactions. So GST component would be embedded in that. So we don't want to touch the indirect taxes right now, and indirect taxes is also too vast to explore and to, taper down and things like that. But what we are telling is, if you're reversing ITR returns, you take all the bank accounts and in that you levy a flat rate of 1% digital transaction tax from 2017-2018. Even if we do this, what kind of magic will happen to both taxpayers and government, you will see in the next slide. So this is what I call the retrospective validation. Means we are going back in time and seeing how much benefit this will offer. So we know this, that national debt position was 169.4 to 172.5 trillion rupees. Right? We already visited this from that national debt position website itself. Next thing is current revenue. Current revenue is net direct taxes and net indirect taxes. Right? This is total net taxes. Means until now how much taxes we have been paying. Proposed transaction tax, that is nothing but our digital transaction tax. So basically you will see a table with these field names. So that's why I said this. So we have already seen this aspect about how much digital transaction value is. We have also seen how much of digital transactions are, but just see this. It's 172.5 trillion. You add up all the current revenue for 5 years, you are still not in a position to pay the debt. You are not able to pay the national debt position. So now coming to my proposition. In my proposition, I said, I want reversal of direct taxes. I want you to apply digital transaction tax, and I don't want you to touch the indirect taxes. So current revenue minus direct taxes is nothing but DTT plus indirect taxes. Now you just take a closer look, right? Just take 3 years of information. 70 trillion, 68.45, 66.09 trillion. We are clearly clearing the debt, national debt. I mean, national debt is something that has been there post-independence. Many governments have been having national debt position even when they passed on the power. But this case study is telling that you can even clear national debt. That's something very powerful about this digital transaction tax component. There is other aspect. If you have a very good tax, the more debt you get. That is also another way of looking at it. But if I am able to clear an existing national debt, don't you think that should be worth considering? Well, I'll leave it to you. Because I'm presenting, I'm not able to see the reactions right now. But yeah, I would say this is the climax of this whole slide, and this is the most important thing you need to keep in mind. The same tabular data, we projected it on a line graph, and here also you can clearly make out the distance between current revenue and projected revenue. When there is so much distance between current revenue and projected revenue, I think it is clear for a taxpayer what is a better tax proposition for himself and government. So let me stop for questions. I'll wait for questions. Okay, so let me come to the summary. So this is just a recap of what we covered so far and why it's important. Clearly, digital transaction tax is much greater than direct taxes and indirect taxes combined. Even though indirect taxes are embedded in digital transactions, uh, many organizations don't file GST because they would be running under losses, but it won't be the case with DTT. It's a consciously crafted revolutionary case study because we just took 2% taxations and 1% taxations for a taxpayer. And we have not tried to. Okay, so I think there is a question. Let me just take it. Okay. The question says, will the digital transactions continue after such a levy? I could not follow that question. So, anyway, the point that we are trying to take, I'll answer that question towards the end. I have an FAQ section. So, the FAQ section should be answering this question. So, let's take it to that. So, we have used, until now, I have not tried to make up something. I have taken the government information only. Government of India's financial data information published by them on their websites. And after doing this, after doing that, I have come up with the digital transaction tax. And yeah, so their individual tax can be saved up to 90%. There is almost 90% taxes. If you have gone through the prerequisites, you will see this information. And we have shown that the government revenue can go up to 300%. If you see in the table also, if you see in this table, you can see that we are seeing up to 387.08% growth. So we have already shown tripled taxes, but we have also shown this. So let me make one more demo. So this is in this particular article, which was a prerequisite in the webinar invite. In this, I have clearly told that let us take one example of an employee who has a 40 lakh of annual income and a 2 lakh of passive income. His expenditures are approximately 30 lakhs per annum. Now, because his salary is 42 lakhs, as per new tax regime, he needs to pay 7 lakhs of income. But as per transaction tax, which is at 1% on both deposits and withdrawals. Remember, it is deposits and withdrawals. So that's why you will see that he needs to pay only 72,000 as transaction tax, and in comparison to the new tax regime where he has to pay 7 lakh rupees. So clearly it is a 90% savings. So this is what we are trying to highlight. So few benefits for DTT for taxpayers. Okay. So there is charity. I mean, now there is more room for charity. You are more flexible to make donations because with 80 to 90% taxes, it will not burn your pocket anymore. So it fosters donations. You are more free to donate to institutes that work for the cause of humanity. That is more important right now. And your savings will be increased obviously when your tax savings come down to 80% or comes up to 80 to 90%. There is more savings, which implies you can invest more in assets, stock market assets or debt assets, anything that is relevant for you. Now, because this is such a simplified taxation, it's an automated taxation. It can be clearly automated. The bank can do the income tax filing going forward on behalf of you. You just have to accept it and maybe make a ITR submission. And that's one big reason to smile, because it's not just about employees also. Just think about businesses. Whether it's a small business or a big business, they don't have to worry about calling a CA and asking them to file an income tax return. It will be a much more simplified process. And lastly, better allocation to government funds. When you have tripled their tax revenues, it implies that you can contribute, government can allocate more funds in healthcare, education, infrastructure, and etc. But wait, there is more. I think there is some more topics which, I'll just mention it at a high level, but I won't go into details of it. We never touched upon cash transactions. Cash transactions, if you read my articles as the prerequisite articles, the cash transactions was around 4 to 8%. That is what we were proposing if the DTT is at 2%. The whole idea behind cash transactions and demonetization is, when a country is so big, cash transactions is going to make things little bit difficult and challenging for the economy. So it is difficult to test cash transactions. So when you withdraw itself, we will apply a cash transaction tax. We haven't considered larger check and DD transactions. Now, if you watched the Indian version of Shark Tank, when they strike a deal with an entrepreneur, when the sharks strike a deal with the entrepreneur, they are not doing a Google Pay or Phone Pay. They are writing a check because it's a very large amount. Anything above 5 lakhs and 1 lakhs in 1 lakhs in digital transactions is actually will not be eligible in the digital transaction. So that time you have to go for check and DD transactions. So this information I couldn't find in the internet, so I cannot tell if 2% of taxes are applied, how much gain it is going to be. Over 1.1 billion bank accounts are currently operating. 1.1 billion, that is 110 crores. In that, 89% are active financially. So our main problem in today's taxation is we are not an inclusive taxation. We don't follow an inclusive taxation regime. Just give me a moment. I'll quickly plug on my battery. Sorry for that. Like I said, we are not an inclusive taxation itself. 3.2% pay direct taxes. Maybe if you put direct and indirect taxes, that will be around 5%. But it is important now with digital transaction tax and 1.1 billion active accounts, it will at least be a much inclusive taxation, and that's why we are able to triple the revenue with lesser taxes, because now lot of people have to pay very less taxes. Earlier, very few people had to pay a lot of taxes. That is the current taxation system. Our direct taxes is exactly doing that. The reason why United States is having such high taxes is 80% or 70 to 80% pay income taxes, and they have still more other tax brackets. So it's much easier to automate tax regime, and if all transactions are considered, digital transactions, check transactions, cash transactions, and you levy a particular tax on that, then it is also called as bank transaction tax. So I'm sure many of you heard of bank transaction tax, but bank transaction tax challenge is that not all the financial instruments are under the supervision of government, and whoever proposed it only remained a proposal. Now it is important to understand that, as I told, even though we have achieved triple tax, we are only 15% of US tax collections, and US is almost having 330 million population, And it's not that everyone is fine in US. Even there are homeless people there. So it's important that with this triple taxes, India uses it wisely. Taxpayer understand the importance of it. So so there was a question which I could not follow as I was presenting midway. So it says, will the digital transaction continue after such a levy? So the thing is, one is we are discussing about a possibility of taxes. This possibility is very much a reality. Now, will it continue or not continue? I don't think that decision I can take. But it's important to understand that if you really like this tax proposal, you have to make it heard. That's all I can say. Okay. So Sanjay sir, if you could tell me what the question is, I will just check. Sorry. Oh, sorry. There is a power outage. So let me. But I can quickly wind up. Okay. So sorry about the outage. So I'll quickly wind up the other aspects. So until this point, digital transaction tax was an important case study. But to make it a reality, your support is very crucial. See, we are in a democracy and we have to make ourselves heard, right? So only 3.5% of the population pay direct taxes, and 8.5 crore taxpayers are the most ignored minorities. It is time we recognize ourselves and get ourselves some kind of recognition. So you need to spread the word, trend hashtag DTT on social media, but please mention digital transaction tax also with it, because it is DTT has a lot of abbreviations. So the first important platform will be LinkedIn, because most of the Indian taxpayers are on LinkedIn. And it's much easier to convey it on LinkedIn, because Tax Guru also will post this video on their portal. So make sure that you propagate in the WhatsApp channel also. See, in WhatsApp, a lot of your friends will be there. You might have at least 50 to 150 contacts. So just spread the word over WhatsApp. Twitter is a more powerful platform. You can just say reverse direct taxes and resume digital transactions taxes, and then you paste this video. It will make a very significant impact. Instagrams are also a good platform. Facebook, Instagram. In YouTube also you can do it. If you have your own channel also, you can mention it. See, and last thing, make DTT a part of your daily conversation for just 10 minutes. Unfortunately, one major, very reputed businessman told that if you want our country to grow economically, you must work 70 hours a week. But I am only telling you that if you want a very simplified taxation, you just need to make this a part of your conversation just for 10 minutes, and it will be a very impactful thing you will be doing. So it's important that you also make yourself heard on national platforms. See, MyGov platform is for sharing your ideas, insights and thoughts. So if you just put digital transaction tax as an idea whenever they are inviting ideas, it will make a significant impact. And I have seen that almost when I proposed this in an unedited format, still there were 50 to 60 people who liked my idea on my government platform. But right to Prime Minister is a different purpose. You have a problem paying huge taxes. then you can raise it as a concern to write to Prime Minister. And it should not be like one or two concerns. If there are 8.5 crore people, 8.5 crore people write the same concern, definitely government is going to take note of it, and elections are nearing. That's also one thing is in mind. So your grievance will go here. So I have created a WhatsApp channel. You can scan the QR code, and this session was almost half an hour, I think, more than half an hour or 45 minutes. Right. So in spite of that session, it will be very overwhelming for everybody to watch the whole 45 minutes. So in just 10 minutes, I have made them understand about how you can leverage DTT in under 10 minutes in WhatsApp. So feel free to follow this channel. This is not a spamming channel. This has only very simple updates. Maximum, I respect everybody's privacy. So only what is needed from a digital transaction tax perspective, that one I'll tell. Now I made a YouTube channel to convey digital transaction tax in regional languages. I got to know that Tax Guru only will will also take Hindi presentations, but my native language is Kannada, so I'll tell in Kannada also. So you can subscribe to my YouTube channel if you want to get updates in regional languages. So now the story modifies. So now let's assume a situation where the government has surplus taxes. So let's see the revised story. So now earlier the NGO came to you. Now you are going to that credible NGO, and now you want to donate blood for a noble cause. Now the NGO tells, I have enough of blood. If you really want to donate, please donate one small sample of blood. So you see, last time it was a big bag of blood, and now it's a small sample of blood. And see their ambulance. It is super fast, it is fail safe, it is fault tolerant. That is what the story is, and I want to bring it to the comparison. So the noble cause remains the same. Okay, and now you are giving a small blood sample, so that represents your less taxes, because 80 to 90% tax savings is much less, right? So your less taxation, and it's all about a more inclusive taxation and simplified taxes after DTT. Now the tax system or tax structure has simplified a lot. Now the government is able to manage efficiently. So this is our end result, and this is the result that we want to see for ourselves. So there are frequently asked questions which I encountered when I presented it in my friend circle. Can DTT replace indirect taxes completely? Mathematically yes, technically not so easy, because it has its own challenges, and I think tax enthusiasts or tax experts watching it can explain that better. It needs to be properly titrated. I'll give you one very good example. For internet we are paying 18 or 12% GST, right? Now earlier internet was a commodity, but today internet is a necessity. So we can request the government and tell, okay, why are you charging us 12% of GST? Why don't you put 5% GST? Anyway, there is more demand for internet, especially post-COVID. So this is just one example of how they can titrate according to the financial needs of the nation. Now there was a sense of fear, especially people who never use the grievance system. I have used it very frequently. They asked me, will anyone trouble me if I file a grievance to Right to PM portal? So one thing is, Right to PM portal is directly under the supervision of our Honorable Prime Minister. Okay, so nobody is going to trouble you. And no, I have filed over 50 grievances. But you may receive a feedback call, like once your grievance is resolved, somebody will call you and ask for your feedback. You can give a positive or negative feedback based on how the grievance was treated. So what is the possibility of DTT inclusion by government? I think this is the same, in same lines the same question was asked. What is the possibility? See, firstly, we are not trying to ask government something for free. Okay, it's not that government has to incur some kind of a loss to fulfill our things. If they do this, it's beneficial to them too. So it's a win-win taxation. It's a win-win taxation reform. So it has a high possibility. The more people, but the problem is people don't say about this. For people, if people are very serious, especially taxpayers, I mean, think about your children's future and think about the benefits you get. Think about how many more vacations you can go. Think from all lines, from what is important to you financially, and then make your voice heard accordingly in the government portal and social media. How is DTT different from banking transaction tax? As I said, digital transactions is one part of banking transactions, right? Digital transaction footprint data, because digital transaction footprint is already available with the government, they know who has spent what kind of amount digitally. It makes it very easy to implement that tax. But if you tell no, don't implement digital transaction tax, put all the other taxes, then it will make things more difficult for government, right? So this is what I want to ask. So please, if you have further questions, please type in. I have almost come to the end of the session, and I want to hear the feedback. If you are giving feedback, please type the feedback. And this is my Instagram ID. If you still have questions that is bothering you that you couldn't ask in the session, you can follow me on my Instagram page and DM me or message. Again, I can answer from a data engineer perspective. Okay, I am a data engineer. I am not a tax specialist. So the scope should be about how I came up with this case study. So I come from a science background, and I thought of using data science as a means of solving our nation's biggest problem. So thank you so much, and once again thank you so much, Tax Guru, for giving me this opportunity to speak. I'm sure by the end of this presentation, at this point of time, your perspective on taxes have changed, and I wish that you contribute and you spread the word on digital transaction tax from your perspective as well. So if the more voices go, the better it is for us to have it implemented. So thank you so much. I'll be